Hey guys, it's Dan, the retired broker, coming to you live from Chicago. If you've been following me, I left Beijing and now I'm back in Chicago. So, what is going on with the market now? I remember when I was a stockbroker, I survived 2008, 2009. We got through it. We were fine. It was totally different what was going on then compared to now. It's always something different, and there's always going to be a black swan event or a recession every 7 to 10 years, it seems like. So right now, our inflation is at 8.6%. It's out of control. We've spent so much money, our government has printed so much money and got us so much further into debt. Guys, this is never going to change. The government's going to continue to do this. They've been doing it forever. Okay? What they need to do is cut spending, which will also never happen. Imagine if a politician says he's going to cut back on social benefits. Well, he won't get elected. You'll lose the election. And that's a big problem with democracy. You can't be honest and you can't do what's best economically either. We need to cut spending. It'll never happen. So we have to understand this. We have to live in the reality or acknowledge the reality we live in. What is going on right now? Gas. Most of Europe doesn't want to buy from Russia. A lot of our gas is going to Europe because they won't buy from Russia. In Chicago, the gas station I go to, $6.50 for a gallon of regular. 6.5. So I think the American average is 5. Bigger cities, 6.5. And then 7.5, close to 8 for premium. It's going to take a while for that to get down too. But remember $2 gas, that was pretty nice. It doesn't really affect me. I don't drive that much. I live in a city, but it does affect the overall economy. Imagine all these truckers and people that drive for a living. It's hurting everyone. Our stock market's down 23% today, year to date. 23% down. Now, what the Fed has been trying to do is they're raising rates to kind of slow down this inflation. But you have to remember, now most people don't know this, but I know this because I was in the financial service industry. In 1994, they raised the rate too high and too quick. I think they raised it about 2.5% in 1 year. And that just ruined the bond market. They can't raise it too fast because it'll shock the system. So we have to understand everything that's going on here. And really, sure, the market's going to recover eventually if you're in it for the long term. But our government's not going to get any smarter. They're not going to be any more friendly to business on taxes, cutting programs. That's never going to happen. We're always going to have inflation. We're always going to have problems over in Europe or Asia. There's going to be problems all over the globe. So let me tell you what I'm doing and why I'm personally not too worried. Obviously, there's a concern. But again, I understand how our government works. I understand how the stock and bond market and all asset classes work. So what I'm doing, I wrote down my portfolio here. Right now, I have money in tips. Tips go up as inflation goes up. I have a tip fund that's doing really well for me. It's kicking out dividends every month. And as of now, I'm a dividend investor. I'm really just investing for dividends. So my bonds, short-term duration, and tips. And that's how I'm hedging right now. I also, as I mentioned in a previous video when I was living in Beijing, I always buy a hedge. I guess I won't say which hedge, but I always hedge the market. And when that hedge goes up, I sell it and take the profit. And when it goes down, I buy it again and hold on to it for long term. And now I'm able to sell it and realize a really good profit. So I have tips, I have a volatility hedge, and I buy dividend stocks. I buy stocks with international exposure, strong balance sheets that kick out dividends every month or every quarter. The vast majority of stocks are every quarter. I have a lot of good REITs that are kicking out every single month. And I receive a check every single month from these REITs and dividend-paying stocks. So you have to think about that. We're having this inflation, we're having this global crisis. Is Apple going to stop selling phones in China? Is Procter & Gamble or Johnson & Johnson going to stop selling, I don't know, toothpaste in China or Q-tips or whichever? No, they have global exposure to the largest markets in the world. And they have these strong balance sheets. Google right now is a buy. Everyone, even in China, they use Google. They're not supposed to. But stocks are really cheap now. They're on sale. So I pick the ones that have strong balance sheets, international exposure, and kick out dividends. Historically, have always been kicking out dividends. That's how I'm investing. Now, last but not least, very important, I'm a landlord. I have multiple units. They're all cash flowing. They're all rented out to high quality tenants, and they're cash flowing. I just renewed 2 leases this month. I raised them both $200 each a month. I have tenants with good credit scores in there, and I'm receiving monthly cash flow from that as well. Now look, I started all this 16 years ago. So if you're just starting, yeah, it's going to take you a while to get to this point. But you need to start. You need to invest for the long term. So when you're 40 or older, you're not going to have to worry about where your next check is coming from. I just outlined 3 different asset classes that give me monthly dividends: bonds, dividend stocks, and tangible real estate. That's how I do it, guys. Remember, now the interest rate on mortgages is horrible. It's over 6%, especially for a landlord property. It's going to be 7 or 8. It's going to be very hard, guys. But there's always a way to figure this out. If you want it bad enough, you can do it. That's my take on what's going on right now and how I'm kind of hedging around that and how I'm maneuvering in this environment. But I built up these assets over the last 16 years. Like I said, you need to start now. If you have any questions, leave them in the comments. I'm going to have a way to contact me soon, maybe in the next month or 2. I've been really busy since I just moved back to Chicago, but I'd love to hear more from you guys. Don't forget to subscribe, and I'll talk to you soon. Thanks.